Welcome again, my viewers and students on this sixth lesson or episode of accounting tutorials. I'll be today talking about three aspects or three areas. One of them being nature of accounting, because already I have talked about bookkeeping, but now today I'm looking at nature of accounting, the uses of the accounting information, and then also the accounting question. Those three areas are the ones I'll briefly be looking at today, because there has been a request on the same, especially the bookkeeping question or the accounting question. Now, you find that when you're talking of the nature of accounting, we are looking at what accounting is, and accounting is merely defined as the process of identifying, measuring, and then reporting accounting information to the users for them to make informed decisions or judgment. Now, many businesses carry out transactions. And we talked about transaction being dealings between two parties or more, but mostly there have to be two parties, which normally have some legal or trade implications, meaning they're tied together by that agreement they enter into. So a transaction can be maybe buying goods or selling goods. Any of those actually is a transaction. So accounting is involved with identifying these transactions, then trying to measure them. Now, measuring a transaction is meaning giving it a value. But maybe when we sold goods, yes, we sold goods, but how many were they and what is their value? Like you sold two shirts. What about the two shirts? We give them value, meaning each was going at 200 shillings, so the two shirts were sold at 400 shillings total. So we have identified the transaction that took place and you've given it a value. And then we eventually report these transactions. Now, the aspect of reporting is the core value or the core of accounting, that when you pick these transactions from the business, the transaction that took place or the dealings which took place within a certain period, then you identify, give them value, and then you give a report to the users. So there are people who are interested in knowing what's taking place in a business, so they need to know where now they know through our reports. So accountants are about actually having to give value to transaction, then report to the interested party. Now, we can give an example, like maybe a transaction like we took a building to use. Is when you enter into a transaction with that person who has the building, you're making a deal with him. The money value of it may not be seen, but when now the payment comes, you agree with him and then you make an agreement. That agreement will have some value, that this house or this building will be going at this value, monthly or annually. That's now a transaction that you're interested in, so that we know in this accounting period we incurred an expense in respect of expenses of rent, and that's what actually will be forming what helped us to generate the income or to run our business within that period there. Now, this has an economic impact on the organization, that the organization will have actually to pay out money for them to get a service of the building that the owner has given to the business. Now, a process is put in a place to collect and record this information, and then be able to classify them and then summarize to the end, so that you produce a report to the interested parties, and then also interpret it, present it in a manner they can easily be able to understand. And that's what accounting is all about. So you find that, as I've said, the process of actually having to assemble, identify, measure, and be able to report on activities in a business, be able to make an interpretation for that. Them who are interested in what's taking place in the business, in the financial or economic terms, is what we talk of now as accounting. Accounting may be defined in so many ways, but that's simply what I can put it from the summary point of view. So I've talked about now those people who want to use, the interested parties, who may make informed decision or judgment basing on the reports or information you're giving them as accountants. Then who are these? Who are these that are actually interested in the accounting information? Now, accounting information is actually produced in form most of what we call as financial statements. So our reports as accountants, we present them in the form of financial statements. They are statements which relate to finances, meaning they have to have some value. You don't present statements which don't have value and then you say you're presenting an accounting information. That won't be accounting information, but that will be maybe merely administrative report and not an accounting one. So these financial statements will always provide the necessary information to the entity, showing the position of the business in financial terms, meaning in monetary terms. So it is performance, the changes in position, in financial position, the growth or decline or reduction or growth of the business will be shown now by this information. Now, this financial position and will actually normally presenting whatever the business has, the resources that are in the business, that the owners have actually invested in the business. Out of now the financial position, there will be resources that are in the business, and anything that does not belong to the business will be reflected in this financial statement. Now, the performance of this business will reflect how, actually, all of the financial information will reflect how this business is actually behaving or how it's performing in the market. Now, whether it's actually generating profit or not, if it's incurring losses or not, or maybe if the assets are growing or not, and also if there are any declines that are likely to happen or happen within a certain period, and these financial statements will always reflect them. Now, the use of the account information mostly are either within or without the firm, meaning they are within the firm or they are outside the firm. We don't only talk about the owners or those who are within the organization. So we have the owners being the prime or the major parties who are interested in the financial position of a business. Now, they are the ones who have invested in the business. They are the ones who are actually now taken to be the entrepreneurs, the ones who have taken the risk to invest their resources in that business so that they can generate some income and also eventually generate wealth. Now, these are either sole traders, meaning a sole person starting up a business to run singly, and that's what we talk about a sole trader. Or they can be partners in what to form what we talk about a partnership. So a partnership formed by two or more persons, but not more than 20, to generate or to benefit out of a business or a venture, so to come now as a partnership. So the partners can be the owners, or they can be shareholders. Now, shareholders are persons who hold shares in the company, meaning a group of persons come together, then they raise capital to form a company. They give birth to an artificial person, which you talk of as a company. It may be private, it may be public, it may be limited or unlimited, whichever form it forms, but it's whenever a group of persons come together to form shareholders, so they contribute money to start up a business, what we talk of now as a company, and that company formed by what we talk of now shareholders. So persons who are giving shares, capital to the business, will be issued a certificate called a share certificate to become shareholders of that company. So they will be actually have information on the financial position of the business at any time. So this financial position and any changes in their position of the business will be of interest to the owners, which I've just mentioned up there. And this information will enable them actually to be able to assess how they need to manage their business and also how it's performing, so that they can assess the need to inject more capital or to improve in the management or to increase the workforce or to increase the value of the assets that are in the business, or the productivity of the assets which they have in the business. There's so much of what the owners will want to know, so that they can be able actually to propel the business either to a higher level or to a profitable position. So these are what to talk about the owners. Now, the next parties which are interested also in the business or in the firm, in the business financial position, are customers. Now, the customers associate, these are persons that we actually deal with to benefit from. These are persons that we sell our goods to. These are persons that we sell our services to, or our commodities to. These are what we talk of now customers. And I said customers are persons that we yet or always we hope or anticipate or we have been gaining from. That when you are trading in business, you know that people somewhere that because of them being there, I'll be gaining, I'll be making some profit, I'll be making some interest, I'll be generating some income because of them. Those we talk about customers. those that we sell goods to. So they're interested in actually knowing if the goods that we are always supplying to them, or services, commodities we are selling to them will be available, or if they will at one time have a shortage or they may not have as required. So they will like to know how the business is performing. Because, for example, if Mumias, I'll give an example, that's a sugar factory in a country called Kenya. If they are selling sugar to a supermarket, like for example, Uchumi, then they'll want to know, is Uchumi still there? How is it performing? Is it actually going to be there for the foreseeable future, near future, so that when you're producing sugar, we know we have a target person. So they will always be interested in knowing the persons that actually are selling to them the item. So Uchumi will want to know if Mumias is performing well, so that when they are selling also goods to other people, because they buy sugar, go sell, then they need to know if Mumias will still be available to sell to our sugar, or we need another supplier in place to be able actually to sell to us. So both the customers and even the suppliers are interested in knowing the position of the business, its growth, its sustainability, its being in the business for longer. All those actually be of interest to the people. So I've talked also with the suppliers. The customers and suppliers are those now who supply goods to the business. So when they are selling goods to the business, they're interested to know if our goods we are selling to them are actually, or the value in them is secure. Because when you're selling goods, mostly you don't sell on cash at all times. At times you may sell them on credit. So whenever you're selling on credit to someone, you need to know the creditworthiness of this person. Is he going to survive in the business for long? Is he growing? Is he constant? Is it going down? So that you now know how to regulate also to secure your credit that you're given to that institution. So whenever you're giving finances, like terms of loans, you need also to know, much as you also need to know the goods that actually you're selling to this person, if they'll be able to pay, and if also they are making them to grow or not. So you may also make your decision based on the information you'll be getting from that farm. That's when the accounting information statements will be important to the suppliers and also the customers. Now we also have the managers. Now we talk of managers, these persons who are running the business. I talked about the owners, which we say the shareholders and all those. And now we're talking of the managers. The managers are persons who do the day-to-day activities of the business. So they always want to know if they are growing, if the business is sustainable, if the business is improving, because they report to the shareholders. Shareholders are interested in knowing now the persons that we engage to run the business on a daily basis, are they giving us value for money? Are they actually helping our business to grow or not? So that's why we have the managers also interested in knowing the financial position of the business. Now the operation of the business depends majorly on the managers. If they're not performing very well, then the business may also not perform well. If they're not competent, the business may not grow. If they are mismanaging finances or the resources of the business may not grow well. And that's why we find most of the survival of businesses depend on the managers, management. So if you have a stable management with ready customers, then you find that the business will grow stable and also to go to higher levels. But whenever the management is poor, whether the customers are available or suppliers are available, the business or will have enough finances, the business still will go down because of most of the businesses have come down or have gone down in most of countries. Why? Because of the poor management. Now we also have lenders. These are persons who give the business credits and also capital resources. Because capital resources are amount which the business may loan or take up from outsiders. They are not in a position to provide all the capital they need, then they will source from other outside parties. So these also will be, just as I said, if you're lending money to someone, you need to know the performance of that person. If he's not competent enough, then you may be also not be willing to add or to provide more financial resources to such a person, lest you lose your capital or your investment. So when you're giving a loan to a business, you need to know the financial position of the performance of the business, and that's when financial information comes into place. So they would like to have information on the position of the firm, basing on whatever they have invested in such. Especially the profitability of the business will determine also the ability of such a firm to be able to pay back the loans, and also to pay back the interest that are on such a loans that you've given to them. So the banks, other non-banking or financial institutions also be interested in seeing the growth or the financial position of the business. Also, the other party is the government and its agents. So these are persons or persons who are interested in now knowing the financial position of the business. One, first for statistical purposes, meaning they need to know how are companies or firms in the business in the country performing. They may want to have an overall view or a deeper view on the sustainability of such a business that are there, so that they can know the economic growth of a country. Also, they're interested in the same, like for example, tax authorities. They need to know how much such a firms will pay in forms of taxes, and are they also complying in making tax returns or not. So the taxes mostly are based on the profits or incomes that the business, the firm is generating. So the financial position of the business will be so much of interest to a government agency like income tax, because their taxation will be based on the performance of the business. Also, the performance of an economy is determined by the firms which are in the same. So the gross domestic product of a country depends on the performance of the business within the same. We'll talk of the productivity of the persons in a country. We'll talk of the artificial and the natural persons, meaning now natural persons are those who are in business that are single or partnerships, and then the artificial are those now which are running form of companies which have come together, joined together to perform the business. So they'll be having so much interest in the financial position of the business. Now we also have the financial analysis advisors. That's number 6, financial analyst and also advisor. And these are actually those who advise the owners, the managers, and other outside interested parties. So when you're making decisions, because you say here analyzing the financials of the business, the analysis of how a firm is performing in regard to other firms in the same business, or the performance of a particular firm with regard to an alternative business which will be providing almost the same products. Those are what the analysis that you're talking of here. That one will want to invest in a different company or in different business which may be providing almost the same service, meaning the alternative products. But now he needs to know how the ones which are there are performing, so that's why it's of interest to them. So also stakeholders, those stakeholders are persons who are part of the existence of such a business, meaning they either have some interest in them, meaning they have invested something in their business, or they are the buyers of the products, or they actually do the selling, or actually they are in the stock market, meaning they want to know how the business is performing, so that now they rate it such a business in the stock market, because the stock market performs basing on now how well a firm is performing, meaning the financial records of the business will show the level of such a firm in the stock exchange, the prices of the shares, and much more that you'll be looking at later. So such analysts always want to know, so that they advise persons who want to invest in such a business via the stock, especially for firms which are in the stock exchange. Their finances are so much of the public interest that people who want to make decisions on investing in such a firms will have to base on to make decisions. Now, they're also interested in the financial position and the performance of such a firm, so that they can actually advise their clients. So there are agencies like the accountants, we have the auditors, we have the lawyers, we have the architects. Whenever they want either to advise persons who want to put up houses, or they want to have some dealings with such a firm, then they need to get some advice from the advisors. And these advisors need to have that information to be able to make decisions or advise those interested. But so that's why the advisors also will need such information. The next one, number 7, is the employees. Now these are, I always say, actually the biggest beneficiaries of financial information, much as they may not be accessible to such information when they're employed there, but whatever source they get information, because most of the business financial position are always the consumption of the public, meaning they are available for use or for access by the general public, because most of them are published in the newspapers or in the dailies. So employees have to have interest. I know most of them maybe they don't, but they need to have interest in the financial position of the business, especially in which they are employed in, or they are prospective to be employed in. So they would like to have information on this, because they also make decisions either to increase the terms of employment in the company or reduce the term based on the prospects of that company. Also because they may also want to make a decision either to search for employment, an alternative employment, or they continue being in the same company. Why? Because the interest of an individual are also important to their growth. When you're serving the company, as the company grows, you need also to grow, or also be conscious on the prospect of the company so that you get an alternative next to serve. There are so many people who get unemployed after some time because they never projected, they never followed up the performance of a company, and they got unawares when the company is being liquidated or closed down, and they're rendered jobless, and they may not be able to secure employment so easily, because it's easy to get employed when you're already running another employment contract than when you've already terminated the contract. It's not easy to secure an alternative job. So it's better to know the performance of the company, and also rate your salaries that you're earning. The trainings that are likely to be available to you as an employee in the same company. And then also those who are interested to be employed in such a company need also to know, before you make up your mind to join a company, you need to know the prospect. You may be employed in a company which is actually closing down next month. Then you lose the opportunity which you had because you're gaining another new job which you didn't know the prospect of the same. And that's why whenever you're trying to apply for a position which has been advertised, at what stage you need to know the background of that company before you accept appointment or you are engaged with the same. So employees are actually also interested in the financial position of such a company. The next one, which should be the last one, number 8, is the public. Now, the institutions and other persons or societies or associations which are interested in the financial position or performance of the firm, and this may actually be because they also make decisions based on the positions of the company. Somebody may want to actually to maybe set up an industry or a service which will be dependent entirely maybe on the position of a company. Like for example, you decide to start a welfare association. That welfare will depend on the sustainability of the employment of staffs who are in that company. So, because they will be the ones who will be forming membership in that association. So if you're not interested in the performance of that company, you may not know how much eventually you'll collect from this. Setting targets, levels of the amounts of contributions, and maybe the capital or whatever shares persons will be holding in a welfare will depend on now the salaries levels, the performance of the company, and the growth of such a company for your organization to be able to yield the benefit that you desire. So we shall be seeing much later how other parties who are the public actually so much depend on the information of the company. You have churches, you have charitable organizations, you have societies like football clubs, we have the trade unions. All those actually depend entirely on staffs who might be employed in the company, and therefore the interest will be on